Okay. Yeah. Good morning, everyone, and thank you to Venu sir and Mentas for giving this topic to deliberate. And it is a continuous learning. I don't think I've done enough reading, and already I've taken a lot of time with Venu sir to prepare on this topic. Still, I feel that the preparation is incomplete, but still, to the extent of my understanding and reading, we will discuss about the principles of contract law, which is applicable to Goods and Service Tax Act, Central Goods and Service Tax Act, as the case may be, State Goods and Service Tax Act. As we know, the GST is applicable on the contracts. The commercial contracts which we enter day to day in commercial businesses. The Section 7(1)(a), which talks of forms of contract, that is sales, barter, transfer, lease, license, all these things are one or other forms of contract. So the study of the contract law is very essential to understand the principles and how it is applicable in the GST Act, and also some principles which is there in the contract has been done away or deviated with to serve an unique purpose of GST Act, because to sharing the revenue and destination principles, all to meet all this requirement, there are some departure which has taken place in the GST Act compared to Contract Act. And as we know, contract goods GST Act is in a set of uh, code itself, and it has all the things which is already required, and only when where there is a doubt or interpretation is required, we may refer to contract law to achieve the better reading or to achieve the purpose of interpretation. No, the contract, if any two persons enter into a contract, the both of them has freedom to form and agree the terms in a contract. The freedom is an essential element in a contract, and court are reluctant to strike down any content of the contract to state that it is not does not have a bargaining power or unequal bargaining powers. The court refrains from altering the terms of the contract. The job of the court is just to interpret the contract or interpret the law, and not to alter the terms. And even at the uh, concept of equity, court will not alter the terms, stating that this term should have been included to become the contract reasonable. So all these terms will not be inserted by the court, and the terms of the contract are decided solely by the contracting parties with their knowledge of trade and commerce. Now, when we say the terms of the contracts are entered by the parties, is one of the essential principle of a contract. There should be freedom for each party to enter and negotiate the terms with other parties to form a contract. But there are some cases where the statute can regulate the terms of a contract. If any terms of the contract which is in violation of the statute, then the terms which is stated in the statute are applicable not the, and the parties may not have a freedom to negotiate some element of contract. We can take an example of Essential Commodities Act or RERA. Even in RERA, some terms are decided by the statute. What is the indemnity that has to be provided after the completion of the flat? The indemnity term to compensate any defect in the construction, how many years it has to be compensated, all these terms are decided by statute. If the terms are better, then that is applicable. If the terms are not better, then what terms are stated in the statute to be considered? And there was a question, when terms are fixed by the statute, can there be a GST? Is there be a contract? And can there be a tax? In case of Vishnu Agencies Private Limited versus commercial tax officer, it was long back it held. It was a case of it is in the Bengal in respect of Cement Regulation Act, because under the in those years cement was fully regulated, and each terms the seller has to take a license and it has to be distributed to the particular person at the rate fixed by the statute. And the trader contended that the contracts are as per the statute. I don't have a freedom to contract, negotiate, and other things. It's not a contract, hence it should not be taxed. This was the case before the court, and court held that even though some terms of the contracts are predetermined by the law, there may still be an area for a participation and can bargain. So court held that even taking a license and trading is also optional. There is no mandate under the statute to say that you have to do this business, you have to compulsory, you have to come compulsory, you have to take a license for trading in the cement. All these compulsory terms were not there in the statute. Even though some terms are predetermined in the statute, and there are a lot of other things which is optional for a contractor. Hence, even some terms of the contract are predefined in the statute. Still, it is a contract, and accordingly, taxes are applicable. Now we'll try to understand some elements of a contract. The first element of a contract is offer and acceptance. There should be an offer for a subject matter and an acceptance by the other party. And this acceptance should be unconditional. If the acceptance is unconditional acceptance, then offer got rejected and new offer is placed in front of the offerer to accept this new offer. Once this conditional acceptance becomes an offer and the other person accepts this conditional acceptance, it becomes an agreement. We can take an example of an insurance company offering to reimbursement of medical expenses. Insurance company, in case of a health insurance, offer to reimburse medical expenses. That is, can be taken as an example. Next, conditions in a contract. So contract has a lot of conditions, and as offer, acceptance, condition, consideration, damage clause, all these things. The conditions are the things which are part of the contract. Condition may be include such as disclosure of pre-existing diseases in case of a health insurance, and requirement of hospitalization for a minimum of 24 hours. These are the conditions inserted in the contract. So some other general condition can be delivery terms, or there can be a time of delivery, place of delivery, or some of the conditions in the contract. Then consideration. As we know, Section 25 of the Contract Act says without a consideration, the agreement is void. Then we can see the agreement must involve lawful consideration. If the consideration is unlawful, then also it's a void. In our case, in our example, the insurances, the health insurance, the payment of premium is a consideration for the contract. Then again comes the performance of a contract. The contract must be performed, such as reimbursement of hospitalization expenditure. On triggering the conditions on hospitalization for more than 24 hours, the performance from the insurance company is warranted. So insurance company has to perform its side of the obligation, that is reimbursement of hospitalization expenses. So GST is applicable only on the consideration and not in respect of the performance. Even in case of fire accident, the insurance company may pay the compensation amount. So that is a performance of the contract and not a consideration for a contract. Hence, it is not, a GST is not applicable on the performance. Then damages, if non-performance of the contract then damages is payable. Damages may be liquidated or unliquidated. The damages, the quantification and method of arriving the damages may be built inside the contract, or it may be determined by the competent court. Now, we'll see what is the difference between contract and an agreement. So there is a next important thing which I needed to discuss, which even I am not clear, but I have my perspective, and we will discuss more about this with the help of the mentor. Section 10 of the contract says every promise and every set of promises forming the consideration for each other is an agreement. An agreement enforced by law is a contract. And there is a difference between agreement and a contract. There is a saying that all contract are agreement, but all agreements are not contract. So all contract is an agreement, because the agreement is a broader term. Only some part of the agreement can become a contract. What is that part of an agreement which is a contract? Is if all agreements are contract, if they are made by a free consent of the parties. So there are some requirement that has to be satisfied to become an agreement. If the agreement becomes a contract only by satisfying some part of the additional condition, like free consent of the parties, competent to the contract. The person who enter into a contract should be competent for a lawful consideration with a lawful object, and are not hereby expressly declared to be void, like agreement for a marriage, agreement in restraint of trade. All these things are void. An agreement which is not enforceable by law is said to be a void. The agreement which is enforceable under the law is a contract. An agreement which is not enforceable by the law is a void. The next important question that comes, whether GST law envisages just an agreement plus consideration in furtherance of business, or a valid contract should be existing. Why this discussion is to see the applicability of taxation on illegal sale of illegal goods or illegal services. So there is a requirement to see whether there is a GST applicability on this illegal contracts. As we know, if it is unlawful, then it still be an agreement and not a contract. Now we'll discuss Section 7 of GST Act. Section 7(1)(a) says all forms of supply of goods and services are both, such as sale, barter, sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. So three essential conditions. One is form of supply, plus a consideration, plus in furtherance of business. By seeing the 7(1)(a), we can do two interpretations. According to me, we can do a two interpretation. One, sale, transfer, barter, all these forms of supply is nothing but one or other forms of a contract and not just an agreement. So it should be a contract. Next, we can interpret all forms of supply, that is sale, transfer, barter, is just a dictionary meaning thereby sale, that is nothing but transfer of title in the goods by one person to another person, is a sale. So that is the dictionary meaning, just a dictionary meaning. Dictionary meaning of sales plus a consideration plus furtherance of business lead to supply in GST. So one argument is the sale should be a contract plus consideration plus furtherance of business. Second one, form of supply, just giving a dictionary meaning to sales plus consideration plus furtherance of business. There is a reason to understand this, because if I say the sale should be as per the Contract Act, then illegal services, illegal sale of prohibited items will be outside GST, because the sale cannot become a contract because of illegal object. Next interpretation is a dictionary meaning plus a consideration in furtherance of business. So according to me, the second interpretation is correct, because one of the principles of interpretation of statute is that no part of the statute or a word of the statute should become odious. If I say the sale is already a contract, that means the consideration is already built into the word sale. But in section 7, the sale is there, and also the word consideration has been added. If the sale is a contract and already includes all element of contract which is discussed earlier, then the word consideration becomes odious and meaningless. As per the principles of statute, which says each word and everything has to be given effect to it, then the second interpretation, which says sale, dictionary meaning plus a consideration plus in the course of business, should be adopted. If this is adopted, then all illegal services, all illegal businesses will be subject to taxation. As we discussed, Section 7, 1A, it looks like a intentional departure from the Contract Act, and the GST has been adopted only selective element of a contract as per the contract law. So that is sale plus a consideration or in furtherance of business was adopted, and other terms, lawful object, lawful consideration, it looks to be diluted in GST law. Again, I need a confirmation or other view of it. It is how I interpreted by reading the law. It may be wrong, and we will wait for mentor's opinion and discussion on this. And based on this interpretation, what we discussed, take an example of a GST on a prohibited article. Sale of opium or any other drugs which is opium or any other drugs which is banned for a sale in day-to-day activities can be regarded as a GST and a prohibited article, and the notification entry is a secondary. First, the taxability, according to me, as per the interpretation what we discussed in the previous slides, it should be taxable. GST on a illegal service, example, GST on a contract killing. If some party has agreed for a consideration to kill someone, is not a contract because there is no lawful object. Whether the taxation requires a lawful object, it is subject to the terms of statute. Income tax is very clear. Any income is taxable, whether it is illegal. And if you see the definition of supply, it looks like plain dictionary meaning of forms of supply plus consideration in furtherance of business. Contract killing, the person who kills is its regular business, even definition of business gets satisfied. So according to me, what is required is only form of supply consideration and furtherance of business to form a valid supply, and all these two things are taxable. Sir.
So just a doubt. So are we saying that in a killing contract, so the killer has to charge GST for the money that has been received?
Yes, yes, sir. Yes.
Okay.
Again, what he's saying. Either you go back to that contract for contract killing.
Yes, sir.
What is the basis for that GST incidence on contract killing?
Okay. Sir, supply, sir.
See, that contract is not a contract. All right.
Correct, sir. Contract is not a contract as per the contract law, because there is no lawful object.
So it is void, and void is void ab initio. So it is as good as there was never any contract. As a result of a non-existent contract, there is a unexplained payment made by one person to another. Now that money is repayable. It cannot be retained. Correct, no? How does it fit within the definition of supply? See, all these things that I think well understood by participants. But this is just to lay the foundation of what we have to discuss in the context of GST.
Correct.
If a contract is illegal, then it is not a contract at all. In the absence of a contract, how do you explain the conduct of the parties? Money paid under a void contract is a money that is repayable. What does it become?
Repayable.
It remains a transaction in money. How can it be taxed on that? All right. So take other examples of contracts where we have to now identify the contractual terms existing in a commercial arrangement. I'll give you an example. All these things are okay. Can you identify the terms of a contract existing in respect of late payment charges? Is there a, can we say late payment charges recoverable by the supplier from the debtor? Can we say that it is a subsidiary contract within the primary contract? Can you say is late payment charges enforceable or unenforceable?
Enforceable, sir.
No, it comes to conclusion based on section 10. What makes it enforceable? Can we, is it a penalty or is it a subsidiary contract?
It is based on the terms of the contract. There can be a subsidiary contract to recover the money in the installment with a consideration, or it can be a primary term in the preliminary contract itself.
So therefore, we have to identify where a contract resides by analyzing the terms of the arrangement. Late payment charges, if it is a contract. Why? What happens to punitive interest? 9% is the rate of interest on bank loan. If you don't pay installment properly, it will become 12%. Can we say that 12% is a 3% is a punitive interest, or do we have to say that the original contract has been altered and a new contract at a full rate of 12% has come up? If we say it is punitive interest, then that 3% is not interest. If we
Correct.
say that there is a substitution of contract, then 12% becomes interest.
True, sir.
That is how we apply all these principles there, no? And then we would analyze Southeastern and Repco and all in that context of those decisions.
Yes, yes, it is all based on the terms of the contract.
So give examples of contracts where there can be subsidiary terms which may themselves make up a full-fledged contract, independent of the primary contract. Although it is not titled as a contract, how do we identify the ingredients of a valid contract within the subset of those transactions? Supari killing, we will see. Because
Yeah.
the conclusion that Supari killing is a valid is liable to GST is not a very sound application of the principles here. It's just a Sikasa level question. You have to see in real life cases where we will identify contracts residing.
Okay. No, so this because they use the word consideration separately. Is that interpretation is wrong? How we need to interpret this, sir? Because whether the sale has to be read as sale as per the contract law, or it's just a dictionary term plus a consideration plus furtherance of business is sufficient, or it should be a contract where it has to be read inside the definition of supply. I'm not able to understand. I tried a lot.
No, this is Sai Prasad always tells us, no, the word sale, whenever it is used in any statute, is nomen juris. I remember Sai telling us that. Sale, when it is used, must be used as Sale of Goods Act 1930. It cannot be given any other meaning.
Canon Dunkerley and
so all the 8 forms of supply have their independent meaning.
Right, sir. Yeah, correct, sir. Even I checked that one of the interpretation, but if I interpret that, then this consideration become OTS in section 71A. So because of that, I got it out.
No. See, sale itself is it would be a valid contract where it is for money consideration.
Correct.
Section 7, they are saying that this existence, because consideration in GST goes beyond monetary consideration.
Oh, what to that? Okay.
231B.
Okay.
So therefore, it's not okay.
Okay. Fine, sir. Thank you. So as we discussed in the previous examples, each contract, the terms of the contracts is essential. As we discussed, we can have 2 types of terms in a contract, where one says the room rent is 1,000, and if you don't turn out or show us on the day when your room was booked, and there is a penalty of 100 rupees. That is one contract, one term of a contract, terms of contract. And if the other contract says the room rent is 1,100 rupees, and you have an option to cancel the booking or to alter the booking dates. Each agreement has to be analyzed and each element has to be seen within the terms of the contract. As we discussed, the court will not alter the terms of the contract which was freely negotiated and entered by a competent parties. The only thing that is important is to read the terms of the contract. In our first example, we have said the room rent was 1,000. If there is a cancellation, if they are not come, then there is a penalty of 100 rupees levied as a cancellation charges. If this is the terms of the contract and the parties have clearly stated this 100 as a penalty, then court cannot alter and say this 100 is also a consideration. within the terms of the contract, this 1,000 is only a consideration and 100 is a penalty for non-performance of the contract. At the same time, if we say the terms are such that the room rent is 1,100 and there is no penalty clauses and they can change the booking dates, where the terms itself is saying that the consideration is 1,100, then we cannot bifurcate this contract comparing with the another contract, because normally there is a tendency to compare one contract with other contract of the same business and to say that here, see, for another person you are giving for 1,000 and this 1,100, there is the penalty and here it is the consideration. So each one business entity can have multiple contract with multiple customers, and each contract cannot be generalized, and each contract has to be seen independently within the terms of contract which is negotiated or entered by parties. So in our example of room rent, the first 100 is tax, 1,000 is taxable, 100 is not a consideration. In second example, 1,100 is a consideration, entire 1,100 is taxable. Now, the late fees, which was discussed a little bit ago, Sir has taken the example. And this is also referred in Circular 178. Circular 178 fails to identify the terms of contract. And can a late fees always be a consideration, or late fees is always be a penalty clause? It is all depends on the terms of the contract. But Circular 178 generalized and said late fees is always facility. That is not right. We have to look deep into the contract terms to identify whether the late fees is a penalty clause or it is form part of consideration. But one thing is very sure, because of the section 15(2)(d), which depart from contract law and says always whether the late fees as a penalty clause or late fees as a consideration. Whatever it may be, late fees should always be considered in a transaction value because of section 15(2)(d) and not because of facility as provided in Circular 178. So here the contention is late fees, as the Sir explained a while ago, primary contract or secondary contract. So there can be a two contract for a payment of a consideration. One contract may be for a purchase of a machinery at X price, and another terms inside the contract to repay this consideration in an installment, which take characteristic of a loan and independent arrangement to repay the consideration. And this late fees can also be a term in a primary contract itself to say that if such and such things are not performed within a stipulated prior, then there can be a damages or a compensation that can be paid. As we know, all these terms of damages or compensation are not a consideration and not liable for a tax. But late fees, if the contract even says it is for a damages or a compensation, because of section 15(2)(d) should be added to a transaction value as per section 15 and tax should be charged. Because of only this section, that late fees got diluted from the contract act terms, and there is a different treatment that is applicable under a GST. As we discussed, compensation for a breach is a penalty clause and it is not a consideration for a contract. and GST is not applicable on this. As we know, contract requires that two independent person should be enter into an agreement with the enforceability becomes a contract. There should be two distinct person, two independent person as per the Contract Act. But this topic is got diluted under GST, and GST said each branch in a different state is deemed to be a distinct person. This deliberate departure from the contract law principle to make each GSTN as a distinct person. And any transaction between, because of this deliberate departure, any transaction, any movement of goods between a distinct person, any supply, any services that is provided by between the distinct person should be subjected to GST, and any transaction, the nature of transaction between these two distinct persons should be explained. It is the deemed alteration of fact in the statute. There is a significant impact or implication because of this deviation. As one of the cases which is formed by GST officers, the principal corporate offers normally enter into an agreement. And this corporate office does not have manpower or any other staff within that premises, but is only board of director or high manager sits in this corporate office, and all the executive teams that works are sitting in Karnataka, and Mumbai office is just an head office to monitor overall performance of the company. The executive part and all the employees and work office, everything, fixed establishment, everything is situated in Karnataka. But the terms of agreement and everything is entered by the corporate office with the customer, which is outside India, was entered. And entire billing of the Karnataka branch was considered as the export of service. And it was an issue between the department to say that the Karnataka branch is only a subcontractor for a main branch, that is Delhi office, and the entire export benefit was denied, and GST was levied, deeming this the Karnataka branch is a has taken a subcontract from Mumbai office. So there is a legal friction which is created in the GST law for its own requirements, because it is a destination principles and each state has its revenue implications. To achieve this legal friction by altering the fact of the contract was an essential. So because of this, the law has created a deeming friction of distinct person. So what happens in this case? The head office has entered into a contract, then the head office should bill export invoices and the branch should bill it to head office. The terms where you enter into the contract with the address, what address it is there in the contract, everything matters in GST because of the deeming friction. So each branch should have a letterhead and independent contract to execute, or tomorrow there is a requirement to explain who has entered into the contract and who is subcontracted to another branch. All these things has to be taken care, because once the fact is altered by the statute, it has to be taken to a logical conclusion. Even though the pan is same, but there is a deeming friction that has to be taken care while doing the self-assessment under GST. Now we'll see the write-off, which is the common thing in a business. The business may write off some amount. It is not because of any other reason. There can be some practical reason where the cost of litigation may be more, or we may expect that there will be some other contract from the customer in future. So because of all this practical reason, there may not be any, they may not take a court route to recover the amount. They may very well decide to write off some of the thing. So when there is a unilateral act of writing off some amount, then it is nothing but a bad debts. When one person write off unilaterally without the concurrence of the other person, then it is a bad debts where a proviso 60 will apply, and according to rule 37, the ITC reversal is mandated. Now, if the write-off is bilateral, that means it is nothing but a renegotiation of original price. The section 16 where it says value of supply is not paid. When there is a bilateral negotiation and bilaterally we decided to write off, is nothing but a original contract was renegotiated with the altered terms. When it is altered, the original consideration has been changed, renegotiated to a new price which is lower than the earlier price. When it was renegotiated, then the section uses the word value of supply. So once we renegotiated with the bilateral discussion, the value of supply itself has reduced and it is not a bad debts. Once the value of supply itself reduced and to the extent of reduced value of supply is paid, then a reversal as per rule 37 is not applicable because it is a bilateral discussion and write-off. That is nothing but in a commercial sense, we say commercial credit note. Because when there is a credit note and debit note, it is nothing but a bilateral discussion and bilateral writing off of some consideration, that is renegotiated price. This renegotiated price in books of accounts or commercial terms will be called as a credit notes and debit notes. That is nothing but a commercial credit note and debit note. Now we are seeing majority of the places where there's a discount on purchases. We are getting a lot of notices to asking them to reverse ITC as per rule 37. The one important thing that needs to be identified with respect to the principles of the contract law is whether that is out of unilateral act or bilateral act. If it is a bilateral act and there is a commercial credit note, the reversal is not applicable. Next, whether this write-off and bilateral write-off, and another word that ordinarily comes is discount. When the discount is given under a contract, as we know, section 2, section 15 condition existing, the discount passed on, the invoices, all these are okay. But what we are discussing, whether such discounts are with obligation or without an obligation. Since once the discounts are given with an obligations, it is no longer a discount. It is a setting up of a consideration for a services which is received from a customer. So once the discounts are given with an obligations on the buyer side, then it is nothing but a partial barter. The partial barter, because this additional obligation involves two different suppliers requiring two separate invoices to be issued. When the special sales drive and promotional activity undertaken by a distributor, the distributor has to send an invoice with taxes to the original manufacturer to offset the liability. And the discount as such may not be proper, as this discount is not a discount, it is a discount given with an obligation sense. There should not be a discount, there should be a cross invoice by a supplier, and these cross invoices can get knocked off with the original consideration. Then maybe a payment of a net amount, but there should be a cross invoice is required in case of a discount with obligation. Now, if you see at this, sorry. Yeah, Minister.
Mylar, so if we do a discount with an obligation, so the obligation could be from the supplier side saying that you should pick so many more goods, I will give you discount, or from the recipient side, you sell so many goods, after you sell, I will give. So it could be from seller in sales side or buy side incentive.
Okay.
So,
sir, yeah, I got your point, sir.
Yeah, the incentive when it is paid, which is purely as on that condition or as an obligation, it would tantamount to reduction in the purchase price and not a sale value by the supplier, right?
Correct. So, sir, here the thin line of a difference is condition to the contract and a new set of obligations. I mean to say, I'm selling this product for 100 rupees. If you achieve so much purchases in this financial year, then you are eligible to 2% discount. It is the terms of the contract where the original consideration has been reduced. That is entirely different from an obligation. Obligation is an additional set of activity that he has to do, which is apart from this contract. Here, it is inside the contract. You need to fulfill certain conditions in the contract to eligible to get this discount. So if you're saying is a target a discount, then it is inside the terms of contract. The price will get renegotiated or price get reduced based because of this discount with the terms which is already entered into. Okay, that is these things. But I am discussing here an obligation which is not the terms of this target incentive. That is different set of activity that needs to be done independently, not buying and selling of this product. Independently advertise this product, do sales drive, not just to increase its sales as a condition to increase the brand value of a supplier. If he does any,
just analyze question which Venu mentioned. See, A has sold goods to B. A is the manufacturer, B is the
distributor.
Now, when A has sold the goods to B, the goods belong to B.
Correct.
Why A should give any incentive for B to sell or to not sell the inventory which already belongs to B? Venu, this is for you. If A has already sold it, the inventory does not belong to A, it belongs to B.
Correct, sir.
It is in B's own interest that B should sell it or not sell it. Where is the question of A incentivizing B to sell inventory which is not belonging to A? See, we have to go back and see. Please be everyone needs to be very careful. Client will only give us information. We have to filter that information with the eyes of contract law to derive the facts relevant for GST. So if we say that the supplier who has already passed on title to the distributor is giving an incentive, it is an impossibility in law. the incentive that the only explainable actions of the supplier in giving this incentive is alteration of the original supply price. And from the documents, it is clear that the original supply price has not been altered. When you're typing something, if the contract has, what was that, Venu? Something you typed
No,
it better.
what I am also considering is the manufacturer, the distributor would also want to avoid the possible option of sales return being made by the dealer.
No, see,
Oh,
that is all imagination, no? There may be private motive. This is why we have to go back into what is motivation, what is consideration, what may happen, what may not happen in the future. To do that, see, there is one case of Combe versus Combe, where after separation, the husband agreed to pay the wife £100 per month. After few months of payment, he stopped making payment. The ex-wife went to court and demanded enforcement of this £100 contract. The judge asked her what for he will pay £100, what he is getting in return. So the lawyers of the wife came out with this argument to prevent wife from filing a suit for claiming maintenance. He has agreed to pay £100. That is the consideration. The court said what may or may not have been on somebody's mind is not relevant. What the court can see as the quid pro quo is what is going to be enforced. In this arrangement, there is no quid pro quo to the husband, therefore, there is no enforceability of this arrangement. The relationship of the parties is very important. Supplier and manufacturer and distributor, that is supplier and customer relationship is there. There is no other relationship. So the customer who is the distributor should only pay money to the supplier who is the manufacturer. If the manufacturer is paying money to the supplier, department has to choose to make an allegation that there is another relationship where the roles are reversed. The manufacturer who was the supplier is now the customer. The distributor who was the customer is now the supplier to receive some payment and say what is the subject matter of that contract. Without going into those things, logical justification of the behavior of various parties is not going to be sufficient to create a contract out of thin air. When the manufacturer accepts a reduction in the price to be recovered from the distributor, there is only two explanations. One, there is a variation of the original contract to reduce the amount that was payable for the original supply, or there is a supply taking place in the opposite direction. That is, the distributor is supplying something to the manufacturer and the manufacturer has agreed to make payment for that supply, which is being adjusted by setting off the debtor with the creditor. We have to choose one of the two explanation. We cannot say any of the explanation is okay, because imprecision in allegation is fatal to the demand. So now you have to explain then this discount what you're saying, is it a reduction of the original supply price or is it a acknowledgement of some obligations? When there are obligations from the other side, then this becomes a separate contract. Okay, when we go.
Nothing, sir. I got the point. I'm just
So,
thinking, even if it, yes,
sorry,
sir.
please.
No, even if it forms part of a separate contract, the determination of the taxation principle would again need a contract if there is no underlying documentation for this additional consideration with the discounter which has been passed on.
The contract will be present, not in necessarily always in the form of a contract document. It may be present in the forms of additional terms and conditions which are agreeable, enforceable. If there is a discount scheme that the company has released and the distributor has accepted, we have to only examine if it is enforceable. We went off into supari killing, but we have to see if such terms and conditions are enforceable. Now we have to see what is called as the withdrawal failure test. If I don't do this, what will happen? Maybe Maila should explain. To be eligible for this discount, what is the obligation of the distributor? Which of those things, if the distributor refuses to do, what will happen? Whether the distributorship itself will be terminated or the discount will not be passed on.
Yeah. Yes, sir. Sir, it is a non-fatal. So if the terms of the agreement which is fatal, then the entire agreement will fail. But the terms of discounts, that is, you have not achieved so much of discount in a particular financial year, then it is a non-fatal. Then only discount is not be available, and that other terms and condition will be there, and the contract will go on. Subject to that, the reduction in the price, which was subject to some terms which was not filled, that terms will not take effect.
So this creates a third category, you know. One is a discount without obligation. Second is a discount with obligation. The third is discount with a contingency. This contingency can be covered by 15(3)(b), unless it is to do with something else. For example, Samsung has this contingency that they will give you a reduction in the price of Samsung TV supplied if you don't sell Sony TV for 3 months.
Got it.
You understand? So the way if you see, the way to claim this is what we have to verify. What should you produce to claim this? So therefore, this incentive or discount has to be carefully examined. But considering these two, three situations, we know now that the word discount is a highly unreliable word whenever it is used in the context of GST, because it sort of pushes you to assume it is 15(3)(b). We have to be doubly careful not to be misled into accepting 15(3)(b) as the only possibility in all cases between supplier and customer. There can be supplies taking place between the same two persons under a different contract in the opposite direction. I'll stop here. Maila, you can continue.
Yes, sir. Thank you, sir. Yeah. See, yeah, that's what Vanessa discussed question now. The discounts without an obligation. There can be terms within the contract, which I just explained, where before the supply itself, there is a term which was agreed that by achieving so much of purchases within this financial year, so other party will be eligible to get discount, because this discount amount was contingent, because it cannot be quantified at the beginning of the financial year, because whether this event which is post agreement, once this things happen, that is the exact purchase quantity and other things have been identified, then only the contingent consideration can be quantified. This contingency get crystallized after a certain event which happens post contract. So because of that, the initial price will be X amount. Once appearance of this contingent event, then the entire consideration amount will get crystallized, and this discount, then it is a pure discount that can be reduced in terms of section 15.3. If the conditions are not satisfied as per section 15.3b, then it cannot be adjusted, and the reversal under rule 37 is also again depends upon unilateral or bilateral write-off as discussed earlier. Thank you, and floor is open for questions.
Isn't it rule 37 only when there is an obligation to fail to make the payment? Here, there is no failure, no? When there is a short payment?
No, again, this failure is a subject matter of again one more debate as such. But failure, when the statute mandate it has to be paid within 6 months, it is an altered terms of an agreement, and it should be paid within that 6 months. So there is a deemed failure if it is not paid within 6 months. So contract terms are overwritten by a statute terms.
No, so now you have a new contract which is coming in by way of this additional discount. So
Yes.
isn't it not subsetting the amount to be paid through that?
Yes, that's what. If it is because the contingency is there, then when the contingency is clear, then the original terms have, as per the original terms, the consideration will get crystallized post that event.
Maila, think of a situation where it is a discount covered by 15.3b,
Okay, sir.
but credit note is not issued because the whole the whole credit management system is based on supplier reducing his tax liability by giving a credit note and uploading it within the time limit on the portal, so that the recipient also reduces the amount of ITC. Now today
Correct.
what's happening, GST is paid by supplier on 100 ITC on 100 has been taken by the recipient.
Yes.
Then there's a discount of 100 given to him via financial credit note. So without making payment of 100, the recipient of the supply is enjoying the credit. Now, is it permitted for us to look at the economics of government revenue and say, you never lost any money, therefore why are you restricting the ITC? Or do we strictly follow Rule 37 and say, if you make Rule 37, second proviso to 16.2, it says that to keep the credit, you should pay the invoice. If you are saying that you have not paid the invoice, then you have not satisfied the post conditions. If you say no, this amounts to payment, then it has to be debtor creditor set off by another supply, which will attract output tax in the hands of the recipient. So Venu, there you may want to comment. If you claim that it is not a failure, but an arrangement to alter the original price, then you still have to explain why section 15.3b and 34 were not complied.
Sir, that's the obligation of the supplier to do within the time, and since he could not do within 34, the possibility of the financial credit note would still exist, no, sir?
No, so the law requires a discount to be recognized as a discount only if it complies with 15.3b and 34. If it does not operate within these conditions, then the full tax is payable by the supplier. But to say that, to read deliberate non-payment into the word failure requires disapproval by the manufacturer. Correct, no? If you say it is against the wishes of the manufacturers that you have failed in making payment. Correct, no?
Or could be a situation where, like, there is a situation where he has a quantification issue linking to the invoices.
No, those are that anyway, that has got corrected subsequently.
Yeah.
See, when we see by to support to save the credit, are we expanding the meaning of the word failure into a default in
No, sir,
payment?
I'm not trying to support the credit loss, but I'm really wanting to fit the understanding of the failure. It should be a real failure that I didn't pay. When I have no obligation to pay, vis-a-vis an obligation and not paid. Shouldn't
No,
we
so
distinguish that way?
So then we have to say that there was no failure. We have to show that there was a variation order altering the original price.
Okay.
That too, which is not complying with 15(3)(b) and 34. That will never happen in the real world. To get the contract itself is so difficult. Imagine entering into a variation order. We will never have variation orders to place on record.
Correct.
To say that, basically, this comes from section 63. For time value of money, so paying 1 lakh 1 year later, the supplier agrees to take 90,000 this year, today. Are we saying that this is a time value of money? No, this is not a time value of money issue.
Correct.
We don't have variation order. Other than claiming that it is not a deliberate failure, there is no explanation for the failure. And failure in the most simplest form is non-payment, deliberate or not deliberate. To say that failure has to be deliberate, we will have to stretch the words beyond the words.
Okay. Failure is coupled with the faith. Failure is coupled with the word faith. Okay, sir. I will think over this point, sir.
Yeah, and this is all national conference views. Failure is deliberate. Failure cannot be consensual, etc. If there is consensual, then we have to show that there is a variation order.
Got it.
And if the variation order is issued after September, such that you could not even comply with section 34, then that variation order seems to be fictitious. Isn't it? To save the credit, both of you fellows have got together and put some fictitious paperwork in place, no?
I don't think we should say fictitious, no, sir, because when the paper is in record, so then we are moving we are going beyond the fact.
True. But in the paper for financial year, the variation order should be signed when? What is the right time for variation order? Well before the original due date of the payment. Correct. Then when you're entering into a variation order well within the original due date of payment, then why credit note was not issued? The actions of the party are incompatible with their innocence. So the conclusion that will arise out of this is that they were having malefides on mind. Their actions are riddled with malefides. We have to be very sure if we claim bona fide, there should be nothing that can impeach that bona fide by our action in our actions.
Got it.
So such variation orders will never exist. So therefore, all of them will fall within Rule 37.
Got it. Mylar, one more question. So,
Yes,
given the contract is in place, from the taxation perspective, can there be a situation where the contract is overlooked and the substance of the transaction has to be looked in?
No, see, only for accountings we need to see substance of the form, but for practical and taxation purpose is only a contract and terms of agreement. Substance should not be seen.
So in case of a job work or any activity, where if the documentation is made such a way that it is not a job work, but it is sale of material and again after processing resale of material. So
Yes.
we should still go by the documentation.
No, terms of contract is in respect of this agriculture product where I sell the agriculture product and I have a contract to repurchase it. Then it is nothing but a sale and repurchase agreement. Even though by substantiate it may be job work, but as per the terms of the contract, it is the sale and purchase. And again, you need to see the terms will have a contractual implication. Once you sell, the title will pass on. And again, when you buy, and again, there may be different product. And what happens in case of a loss or fire when at the premises of job worker, who will lose? All these things have implications.
No, in this you have to be careful. If you say it is not a job work but a sale and purchase, there should be total freedom for the so-called seller,
Job work.
job worker, not to maintain one-to-one accounting.
Correct.
Because A quality material of Mr. A, he should be free to sell to Mr. B. And B quality material of Mr. B, he should be free to sell to Mr. A. If there is a requirement in the contract that one-to-one correlation have to be maintained, because when you go to get any job working done, your own material have to be used for your project, there is no such compulsion. As long as input-output ratio is maintained. If there is a restriction that a one-to-one correlation have to be maintained, then it may make the purchase order for raw material and finished product look like a bogus document. This is what Motor General Stores talked about. Be very careful.
No, that's it.
Thank you, sir.
Yeah. Mylar, one more doubt is for the contracts that are entered without permission or a license to perform those kind of activities. And if I take, let's say, a simple example, I have some inventory with Taj Hotel. And though I do tour operating services, but I am only giving room booking to some corporates. Can I still call this as an accommodation service and not tour operator services? Because my contract with the corporate is to provide a hotel accommodation while I am not Taj.
Okay. So
The
trading and
contract says
service.
I will give you Taj so many room nights.
Correct. So that is permissible. So trading in service is permissible. I can buy and again I am not saying that my room I'll get an arrangement in the 3-star, 5-star hotels. So that is permissible.
So even though I am not a hotel and I'm entering into contracts of the nature of being a hotel, so would it still qualify to be as a hotel accommodation services?
No, again it is depends upon the terms. If I say I'll make an arrangement, then you are a tour operator an arrangement. If you say I'm provide accommodation, then the Taj will bill you and you have to bill to them as an accommodation service. So if you are just arranging an hotel accommodation, then you will charge your transaction fees and Taj will directly bill them. But if you are saying you are only provide an accommodation and nothing but you are booking on behalf of them in the Taj and Taj will bill you and you have to bill them, the trading in services is perfectly okay according to me.
And continuing the same analogy, most of the tax audits are signed by the chartered accountants but billed by the tax practitioners to the end customers. And chartered accountant bills the tax practitioner in a consolidated form. So the contract for getting a tax audit is not there for the tax practitioner, but he is still signing it as a tax audit.
No, consideration to the contract can move from a different party, But you can't say that there is no condition. There is an implied agreement between the auditor and auditee, but the consideration is only moving from a third party.
No, Mylar, you're altering the question here. If the tax practitioner provides tax audit services to a client, is it possible?
Not possible, because law does
See, he
not
does not
permit
have
them
the legal
to
authority. See, he does not have the legal authority
to do it.
Then how can he? Okay, we'll go back to a hotel example I missed it. Can tour operator use HSN code 9963 hotel accommodation? He does not have a hotel.
No. In my view, no.
If you see the explanatory notes, talking about 9963 and 9972, very clearly it says 9963 excludes 9972, which means to provide to use 9963 HSN code, you should have either owned an immovable property or you should have taken an immovable property on rent.
On rent, please.
Which is why the Tagar Vasudev Ambarish judgment is wrong. That hostel, Madras High Court also is wrong. How can you use an HSN code for accommodation when you're a tour operator where everybody knows that it is not? See, we'll take an example. There is Akbar Tours. You go to Akbar Tours and you can buy Taj Hotel accommodation. Akbar Tours gives 100 crores to Taj and it gets a preferential rate on 2,000 room nights all over the country. They start offering it for sale. Whatever they do, they will be an intermediary. Invoice will be given by Taj Hotel in the name of the guest or Akbar Tours or whoever they have to give the invoice to. Taj Hotel will use 9963. Akbar Tours will have to use 9961 or 62. Similarly, the GSTV cannot issue tax audit services. Similarly, head office cannot do ISD for statutory audit services. We have to recognize that capacity to contract includes the legal authority to provide said service. To use HSN code of hotel, you have to be a hotel. To use HSN code for a statutory audit, you have to be a chartered accountant. To use HSN code applicable to healthcare service, you have to be a clinical establishment. To use HSN code of an education institution, Byju's can never use education HSN code and claim exemption.
Correct.
Legal authority is not just corporate identity, independent existence. It's not just a human being or a legal entity existing. They must also have the competent authority to provide said service. If you have all these online websites, what's that? Cred will sell hotel accommodation. They can never use 9963. Which is why that compensation, 1,000 rupees, 1,100 rupees, all those things become relevant. Because in the real world, people will prepay and block inventory and sell at a premium. There are cases where they will sell at a premium. There are cases where they will make a loss, but collectively they will be profitable. So if they take arrangements like that into consideration, we can't say everything is 9963. If you stay in that circular 178, why it is wrong is 9963 HSN code can be used if you provide hotel accommodation. If you pay 1,000 rupees for a hotel and you never stay in the hotel, if you pay 1,000 rupees for a hotel and there is no show, you never stay in the hotel, how can it be 9963 HSN code even if the money is non-refundable? You only promised to supply hotel accommodation, but ultimately you never supplied hotel accommodation, because if you see overbooking of hotels and flight tickets, the overbooking money retained can never have, for example, hotel flight ticket has, what is the rate of GST? 0.9% is the GST. Correct, no? On no-show tickets, how can it be 0.9%? Should it not be 18%? See, these questions arise, which is what that circular does not go into. Anyway, I stop here, but too many examples to discuss. But we know your thought.
No, sir, I agree with the same view. So I feel it cannot be those services. That's why I had the doubt. Yeah.
Right.
Anyone have any questions? Any other questions?
Sir, this Tagar Vasudev case, what you took up, sir. I mean, why do you say, sir, that judgment is incorrect?
See, the owner of the building has given the building for commercial purpose. Owner of the building has given the building for commercial purpose to do some business. We will examine that transaction. That is not residential dwelling. That is liable to GST.
Yes, sir. They talk about the popular
all.
sense of interpretation.
No. All that is, see, all those things are not relevant only. We have to see what it is a commercial property. If you see electricity tariff, if you see municipal tax, everything is commercial. Somebody came and approached you saying that we are running student accommodation business. Please give us your entire building. Maybe they are using it for accommodation. Maybe they are using it as a laundry. Maybe they are using it as a kitchen. Whatever they want to do, they will do. Once you give it for rent, they will use it. The only thing agreement will say is no illegal activities in this building. So it is a business. That part has not been examined by both Madras High Court and Karnataka High Court. Second part of it is student accommodation available on per day tariff. Can you take a student hostel on per day tariff like a hotel? Because we are depending on 1,000 rupees or equivalent thereof. Student hostel is never available on per day tariff. Normally, it is available on per year tariff because you will keep going on to an summer vacation and winter vacation, and the hostel will be empty. For that also, they collect money. 12 months is the fees for student accommodation. That is the second point, which is also not been considered. So therefore, these judgments are per inquiry because they have not considered these facts. Third aspect is, if 1,000 rupees per day or equivalent thereof is sufficient to cover student accommodation, which is never available on per day basis, then let us see why in 2018 July, they inserted entry 9D for old age home. Old age home is 25,000 rupees per member per month, which is also less than 1,000 rupees per day. What was it that could not have been achieved with entry 12? That they felt the need to insert entry 9D, which means old age home would have, because old age home is not available on per day tariff, old age home would have become taxable. That is why they discovered their mistake and they inserted entry 9D from 1 year later. If you keep that 9D as an indicator of the limits to this 1,000 rupees per day, clearly student accommodation is out of this.
So it
But
would come in 7.6, no, sir? The residual 9963 only, residual 18%.
No, you can say 12%.
How, sir?
No, because the equivalent, if you identify 12% tariff is the maximum you can debate.
Which entry, sir? 7.1 is purely hotel accommodation. No? So this cannot be equated to hotel accommodation. So it will be residuary entry 7.6 only, no, sir?
Once. No, you're right. But the question is today, we are all claiming it to be exempt.
Sir, they've also discussed one. Sorry, sir. Yes, sir.
Go ahead.
They've also discussed that, this is a long stay equivalent to, residential usage and not like a hotel accommodation where only a short stay is done. Those things
No, no.
also there.
It is right. See what happened when Arvind Dattar appears, no, for a matter, it sort of creates this very limited debate from the revenue side. So therefore, these issues may not have got added. Today, department is going after all student accommodation hammer and tongs, and I know large number of them who are paying tax. And there are some who have been given this adventurous interpretation, saying that you have to, even in Madras, they are going after student accommodation, even though there's a High Court judgment.
Yes,
Because
sir.
revenue also doesn't want to give up this revenue.
They've also said that, that the question of whether it is a commercial establishment as it is registered in revenue records is not relevant because entry doesn't discusses it as something they've put.
No, we have not referred to the explanatory notes to the scheme of classification of services, where the reference is clear that to provide accommodation, you must have the property. So once you fall within 9963, the duration and the purpose of usage does not make any difference. Then why, if hostels have to be exempt as residential dwelling, what is the justification for hotels, service apartments?
They've also given a comparison
therefore,
that when yes, sorry, sir. Yes. That
Go ahead.
a residential dwelling like, a 2 BHK, 3 BHK, which is more in terms of, commercial value and stuff, where those people only are getting an exemption where the target is for a student community and a middle class community or kind of that. I mean, it touches upon the policy matter over here, sir, stating that comparatively, when that itself is exempt, this cannot be charged. That is also, I think, one of the arguments taken, no, sir.
But that is not. But do you think that is a reliable rule of statutory construction? The economics of the decision.
Yes, sir.
We
But
should be
that has
careful
worked for that
what not to.
decision on that day. Okay.
So therefore, we have to be clear whether we will allow these economics and these extra legislative motivations should interfere with our understanding of the notification. So today it might convince one authority, tomorrow it may not convince another authority. What do we do in such cases? All those become relevant. You see the number of people who have claimed exemption and forfeited ITC. Tomorrow when they receive a notice, what are they going to do? They can maximum say it is not 74, it is 73.
So entry would be 7.6 only, no, sir? 18% ideally.
When I had checked last, we had come to 7.1 as the conclusion. I'll see again if that needs to be relooked at.
Okay, sir. Thank you.
I have a chart here for what it should be. I'll share that just for reference.
Sure, sir. Thank you, sir.
Thank you, sir. Any question from anyone else? All right. Thank you, everyone. Again, I'll upload this session by this weekend. The material is already shared in the drive, whatever is received. So thank you, Maila, and special thanks to Jatin sir for intervening and correcting us. Yeah. Thank you, sir.
Thank you, sir. Thank you.
Good day. Bye. Maila, you can end the session.
Yeah, sure.